What's up, Wealth Nation? We are diving into a topic today that often gets overlooked until it is too late, and that's life insurance, folks. In today's video, we are going to uncover some crucial insights that we wish we knew about life insurance back in the day. So go ahead and pull up a chair because we feel like this information is crucial in securing your family's financial future. My name is Carmen.
And my name is Darius. Make sure you subscribe to our channel and hit the notification bell to be notified when we post new videos. Now, before jumping into the video, what we want to let you know is that we are licensed life insurance agents, and we've been agents for about 7 years. And a part of what we're going to discuss is things that we wish we knew, not just before we had life insurance policies, but before we were licensed life insurance agents.
Yeah.
Now, we're going to discuss our opinions about these things in two different categories, which are term insurance and permanent life insurance. Now, term insurance is only for a specific term, where permanent insurance is for your entire life. Okay?
And the other big difference to note is that with permanent insurance, there is a cash component that grows inside the policy that you can access at your disposal. So that's a big thing that we need to make sure that we uncover, because that's going to be some things that we talk about today.
Right. And I'm glad you brought that up, because the very first thing that I wish I knew is the fact that we aren't the largest purchasers of life insurance policies.
Yes. We, meaning the public?
The public.
Yeah.
It's these Fortune 500 companies and banks. Banks and Fortune 500 companies are the largest purchasers of life insurance in the entire world. And obviously that's the case because they know something about it that we don't know. They're using it for something outside of the death benefit.
And you can look this up. It's called BOLI, B-O-L-I, bank-owned life insurance, or COLI, corporate-owned life insurance. So these are big topics that we knew nothing about.
Right. Now, with just my opinion, with what I've learned is, I think the reason why these companies are using these things to pay their executives is because they fall in a different category on their accounting sheet, on their profit and loss
cheat
statement.
code.
Yeah, it's a cheat code, because when you take a loan and you pay somebody a bonus or something, you don't have to pay any taxes on that. You don't. It doesn't count as income or profit, so to speak. But when you take a loan, it operates differently and falls in a different category. So I think that's one of the benefits that we can take from it as individuals, and how we can take some of those same steps to use it for investments, because it's not going to be taxed exactly the same way as if we were to use our own income.
Yeah, agreed. And I think to kind of piggyback off of that and understand what we wish we knew is how seriously the banks and the corporations take life insurance. Because when we first got our first term policies, when we were in our mid-20s, we just thought we were checking the box and being like adults. Like, okay, good. We got life insurance outside of our employer. We're settled. We have some roots. But really, we just had no idea what we can do. And I say this analogy thinking about, like, it's like watching basketball for the first time and seeing like Michael Jordan slam dunk something. You're like, dang, I need to get back out in the yard and keep practicing.
Right.
You know, it's like, I got to do a little bit more with my game. And so for me, if I knew what I knew back in the day, I would have gotten as much insurance as I could have possibly afforded, and that the insurance company would have given me, just because, one, I was as young as I was then back in my 20s. And then two, if I bought permanent life insurance back then, I would have had the ability to use the cash that grows inside of my permanent life insurance to pay for some of my financial needs. And I could have used that as maybe like a different savings approach as opposed to what I was doing before. And also knowing what I know now is seeing, you know, we've had families who've passed, our clients have passed, our clients have had families who've passed, and there is just never enough death benefit. So I would have gotten, and still to this day will scoop up as much death benefit as I possibly can, just to continue to ensure that my family's needs are taken care of and that my income is well insured, just to cover the basis.
Yeah. It's a really good explanation. Yeah. And as you were talking, I was thinking at how insurance agents sell insurance differently than how the insurance companies sell it.
What do you mean?
Well, insurance agents would sell, or we would purchase life insurance based on a death benefit, but the insurance company wants to know how much you're able to pay.
Yeah, good point.
So what we do is we say, okay, we want X amount of death benefit, but let's say we're buying a whole life insurance policy, we may not have enough funds. So what I think change for me as an insurance agent is, okay, I'm asking people how much premium they can afford versus how much death benefit they want. Because that's really what the insurance company is looking at on whether or not you can afford this policy first, and then second, your health.
Yeah. And also going back to with that is I feel like consumers look at life insurance as an expense.
Yeah.
Right? Like to just the mindset behind life insurance and it being expense just hurts my heart because every single day, all of y'all watching this video, some of y'all have had people who have passed away, and you may not have been financially impacted, but the family that might have been financially impacted or whatever, right? So you get the point that I'm making. Like in that moment, you aren't thinking about life insurance as an expense. You're thinking of, crap, I should have got some more. Or I shoulda, coulda, woulda, da-da-da, right? So it's like in this moment, I can't be present enough with you to let you know, like, you need to evaluate your death benefit needs to ensure that your family is covered. Like, we all should be striving for our children to be trust fund babies. like just to have that mindset, right? Because think of that peace of mind as opposed to the stuff that we consume that isn't going to bring us any value at the end of the day.
Yeah, like we mentioned earlier, banks and these companies look at life insurance differently. They look at it as an alternative source of income, an alternative source of financing, right?
Yeah.
Whereas we look at it as an expense.
Yeah. Different mindset.
Different mindset.
Very, very different. So the next point for me that I wish I knew with this whole process is that I would have designed more policies for retirement, and that's using the whole life or the permanent life strategy. So knowing that I will always need money in the future, I would have set myself up back in the day with more policies that are designed for me to be able to take income at a certain point of my life. I didn't know that back in the day. I didn't know that wasn't even an option, but now that I know now, I would have copped a few of those babies to make sure that I was good. And that would have totally replaced 401ks, Roths, whatever it is for me back in the day, and continue to buy them. Like these would have been gifts that I would have given myself every year.
Or you know what? Not even as a 100% replacement, as an add-on. Yeah. Because maybe there's a down year where you don't want to take any income for that year. You want to skip a year because, man, it's a down market. And if you take money out of your retirement that year, not only are you going to lose the money that you take as income, you're also going to lose because of the fact that it's a down market and it's going to cost a lot more to take money out.
Very good point.
So why not skip a year and use your alternative source of financing as a way to supplement that income for those down years?
Thank you for that clarification. I hope you all understood what Darius was saying. Yeah, because and never are we ever saying that like life insurance is the end all be all to your financial needs. We just think it's a tool in your toolbox, and it's a tool that you really need to make sure that you understand, because like how many times do you underestimate like the little spork thing on the hammer? Like you always need the hammer, but how the hell are you going to get a nail out? And it's handy when you need it. So it's like making sure that you understand all those tools that are in your toolbox. Right.
Now, here's a simple one that I didn't understand or didn't realize that I had at my disposal is convertible term.
Ooh, money.
Right. So we bought these term insurance policies when we were younger. But if we would have got with a different company like a Mass Mutual or American United Life or Security Mutual Life and actually had a term policy when we were younger, we could have converted that term policy into whole life before the term was up, instead of surrendering it or saying, okay, we're not going to use this policy anymore, we're going to start a whole life insurance policy. We can convert term insurance into whole life insurance without having to go through all the extra tape.
100%. Yeah, because I'm glad you said that. So with my holistic plan going back, like I probably would have bought a ton of term because that's what my pockets could have afforded at the time, because whole life insurance is more expensive. But I would have bought a ton of term to convert at one point to make it whole life. And then that death benefit would have just carried over.
Right.
Yeah. Things we wish we knew. Now, one thing I think we're talking over this, but we haven't necessarily stated, is that you can have multiple policies, which is why we keep talking about I would have gotten as much life insurance as possible. You may not hit it out of the gate with your first hit. It may not be a home run. That's why you probably might buy multiple policies to continue to make sure that your income gaps are covered. So that's when we talk about that. That's what we mean when we say we buy as much insurance as the insurance company would allow us to get.
Right. And in that same vein of term and whole life, or converting term into whole life, I didn't know that one of the riders on a whole life insurance policy can be term. So I can have term inside of my whole life insurance policy that only lasts for a certain period of time, but it significantly increases the death benefit for a short period of time. Now, different people need different things, but there's a lot of different things that we can do with whole life insurance that I didn't know prior to becoming an insurance agent.
Amen to that. The other thing that I would say for me is to regularly check the coverage needs. Like as Darius and I sit down and do like a holistic review of our budget every year, like that should very much include life insurance. Did our income increase? If so, then we need more life insurance to cover those gaps, because what we find typically happens is families get one policy, 5, 10, 20 years goes down the line, and they never think of getting any more life insurance. And what happens is your lifestyle has increased from here when you first got your policy to here, and now your lifestyle needs are much more expensive than what they used to be, and you don't have the death benefit to cover that gap. Right. And that's where we find families really get into financial crunches, because let's say that the breadwinner passes and there isn't enough death benefit to cover the family's financial needs now. So these are, again, huge things that we can continue to talk about when people are like, oh, life insurance is just so expensive. I don't know what I'm going to do. Well, what are you going to do when your family passes and you need to get Jimmy in school, or you need groceries, or you need to pay your taxes? Like, you're not going to think about life insurance being an expense at that point. You're going to wish that you had more.
Right. Now, you know, what comes to mind is I was recently at a real estate investment summit, and the gentleman that was talking said that his job was paying him $150,000 a year, but he was doing real estate on the side.
Yeah. Oh.
And his income on the side was $450,000 annually. Yeah. So he was like, he quit his job and he, you know, focused on real estate full time, because that was 3 times more than his income.
Totally.
So in doing that transition, yes, he has $450,000 in his investments, but it's now his income. But does he have the insurance to keep up with that? And here's the idea, the reason why we're talking about insurance. We're not saying to to invest your money and not buy life insurance, or to buy life insurance and not invest. We're saying to do both. Yeah. Because the idea of life insurance is going to replace your income, is so you can take those funds and invest it at, let's say, a 10% interest, and you have your cash flow going for the rest of your life. So we say take your income, multiply it by 10, and that's the amount of life insurance that you need for your coverage. And that's back to the point of me saying that you invest those funds at 10% interest. That's cash flow that is ongoing in the absence of that person that passed away. And that's in parallel with the investments. So it's very important for us to understand our life insurance needs, because it's not the fact that we can have one and not the other, or we should pick and choose. We should have all of it. If it's going to draw income for us, then, or increase the amount of money that our family can get or we can get, we should use it. Yeah. If it's at our disposal.
Very good point. And what I was going to add to that is, a lot of times people just count like their 9-to-5 income, and they don't count the side income that they're making, right? So that's a whole nother bucket that you should be counting that needs to be replaced at some point, because you're using that income in one way, shape, or another.
And you're probably paying taxes on it.
Yeah. If you're paying taxes on it, that income needs to be insured for real. Right. So is there anything else that you can think of? I think we covered the whole gamut. Was there anything that came up?
No, I would just end with the last thing I said about taxes. Okay. These Fortune 500 companies and these banks are leveraging life insurance to pay their executives as a tax play, because it falls under a different category. And when things fall under a different category, it operates differently. We're also aware now that life insurance can be an alternative source of financing, where we don't always have to depend on the bank. We don't always have to depend on a credit card for emergency. We have other ways of getting money, and life insurance is an alternative source of finance. Absolutely. I mean, life insurance is a fundamental aspect of your financial planning, and it can provide significant peace of mind and security to your loved ones. So if you are interested in getting more life insurance, then definitely click on the link below. Our Wealth Nation family would love to help you. And if you want more information on whole life insurance, check out our next video where we tell you how to use whole life insurance. And don't forget to own your own lifestyle, or someone else will.